We have a stock to address at hand, and that is GMR Infra. So, on that note, if we can actually have, we have three marquee investors, including Tata Group, GIC, and SSG Capital, which will invest 8,000 crores to buy stake in a GMR airport business, and while 1,000 crores will be pumped into the airport arm, the remaining amount will be spent to acquire stake held by the GMR subsidiaries. Let's discuss this in greater detail with Saurabh Chawla as well as Sushil Modi of GMR Group. Joining us in this conversation is also our markets editor Neeraj Shah. Neeraj, it's over to you.
Okay, thanks Agam for that. Gentlemen, good having you. Thanks so much for joining in. And Saurabh, good seeing you. I was wondering where you were headed post DLF. Now I know. So good seeing you here. Let's start off with this conversation around what this deal means, because as I understand, 8,000 crores in the airport vertical and GMR Infra Limited, or before posing any questions of my own, why don't I ask you to explain this deal to us and what it means for the listed GMR Infra?
So primarily what we have created is a platform play with some marquee investors, namely of course GIC and Tata's and SSG. And in creation of that marquee platform play, we have also succeeded in deleveraging the balance sheet, the standalone balance sheet of GMR Infra and the standalone balance sheet of the GMR Airports. So it's a win-win game. It's again a game changer in the infra space, where going forward we will have the benefit of expertise, financial structuring, capital available from these investors, and combined with the development skill sets and management skill sets of GMR, we'll be able to really play into the growth opportunities that India offers. Why India? Actually, globally, there are other parts of the world where aviation is growing at a double-digit pace. So the whole idea is to exploit that and participate in that growth story. So two simple takeaways: one, creation of a platform play with global majors, and two is to deleverage the GMR balance sheet.
Okay. Sushil, you want to add something to this as well? And I would want to talk a little bit about the non-airports business first, because then I'll have a slightly lengthy conversation about the airports business.
No, as Saurabh rightly articulated, so this effectively, if you see, it has become an unformidable platform. So it was an unparalleled platform already created, being the leader in the country in this space, and even globally, if you see, we are the fourth largest airport infrastructure player in the private space. So and as we move along, perhaps we are only going to go up in terms of even so-called ranking globally. And with these kind of murky names that gets attached to your business, that that itself endorses and establishes the fact that we are the leader and we carry the capability to take this business to the next orbit. We already have grown phenomenal, and we are going to go to the next orbit of growth as the time goes by.
Okay, I'm going to talk about this a bit, but sort of you alluded to how this is a win-win for deleveraging of the GMR Infra balance sheet as well. Your Q3 release, if I'm not wrong, says that there is a net debt of 20,000 crores that sits on the books of GMR Infra, the listed entity, which has about 6,800 crores of debt due to the airports vertical. Can you elaborate a bit on what would happen to that numbers or those numbers as a result of this deal alone?
So the consolidated debt of 20,000 crores obviously will come off by about 8,000 odd crores. So that's a straight math. So the consolidated debt that will remain is about 12,000 crores. But yes, on the airport side of it, it's the 6,000 odd crores which is there on the standalone airport business. That will also come off to a minuscule number. So that's the deleveraging story that we bring to the table with this divestment of equity in favor of these marquee investors.
the minuscule number would be a combination of the 1,000 crores as well as the earnouts of about 4,400 crores. That's how you're reaching to a minuscule number? If you can just elaborate a bit on that math.
No. Go ahead.
So let me just explain you.
Sure.
So the 20,000 odd crore is the consolidated debt, as you rightly said, basis our quarterly results of December. So of this 20,000 crore, 6,500 odd crores was the corporate debt sitting at GMR Infrastructure Limited, which is a holding company. So effectively what this transaction is bringing onto the table is 7,000 odd crore of secondary proceeds, which comes straight to the GMR Infrastructure. So thereby meaning what Saurabh indicated, this 6,500 odd crore of a corporate debt becomes minuscule. So, and which is what effectively is something that we want, what we call the leverage. Because other than that, whatever is there, which is, let's say, 14,000 crore erstwhile, and now let's call it ballpark 12,000 crore after this 8,000 crore gets utilized, then those all are against various projects which are having substantial cash flows as well as the ongoing accruals year on year. So those all are on its own feet. We have addressed in one shot all the big let's call it elephant of corporate debt, which was an apprehension and putting us into a category of being the leverage company. So no more leverage. What we talk from here onwards is growth. How fast, how much.
No, and I like the optimism as well, but gentlemen, just one question on the GMR Infra, which will now be devoid of, I mean, devoid is a wrong term maybe, but separated from the airports business, right? That's an intention that you've stated, that you will demerge the airport business. The GMR Infra company will have all the other businesses. What happens to the deleveraging and the operations at that business before we come to the airports business, because that'll be a slightly lengthy conversation? What happens there? 12,000 crores or 13,000 crores of net debt still exists there, and the businesses for the space at large haven't really come out of the woods as yet, not just for you. How does that picture look like?
No, so let's understand our overall debt number. The 20,000 crore that we just spoke, of which, as I said, 6,500 odd crore was the corporate debt, right? The another 6,000 odd crore, or part of it, or rather 7,000 crore, is the airport debt. So once you take out the airport debt and the corporate debt, then what is left over is basically another 5 or 6,000 odd crores, and which is again more primarily against our various road assets. And the road assets, as you know, is all annuity and some bit of a BOT project. So that those have their own revenues and own earnings to service those debt. And similarly, we have some debt around our energy vertical in terms of the coal mines. So those all again has a significant earnings. Our coal mine itself at the mine level last calendar year had an EBITDA of somewhere around $170 million, and in that we own 30%. So net henceforth, when we talk about airport business and all the rest of the businesses, what we are talking is the rest of the businesses having another debt of let's say around 5,000 to 6,000 crore, and that will have its own cash flows irrespective to service those debts on an ongoing basis.
Okay. Thanks for the clarity. I'm glad I've got it right now. Let's talk about the airports business now. You've got large investors in. You've bid for certain airports which operations will begin at some point of time. You're already owners of certain airports as well, or operational owners of certain airports too. How is that business looking, and how does that change as a result of the monies and the capital coming in as a result of this investment?
So basically the existing airports, so as you rightly said, we are having 5 airports in the country and another two overseas. So 7 airports in our portfolio. Of the 5 in India, 2 are operational and doing fantastic, which is Delhi and Hyderabad. The another 3 in the pipeline, where one Goa is already, construction has already begun, and Nagpur and Vizag to commence soon. So net, these businesses effectively, if you see Delhi and Hyderabad, those all are on their own feet. In fact, Delhi is going for expansion from 66 million passenger capacity to 92 million passenger, and similar, so is the Hyderabad, which is 12 million passenger capacity today, going to around 30 million passenger capacity. And that's simply because the fact that these airports are growing, high double digit. So with those growth, we need to expand and expand fast. So for all these expansion, the company has huge cash sitting with them, those airports itself, and then they will continue to have their earnings year on year, because this expansion takes anywhere between 3 to 4 years. So henceforth, these airports are their own feet. They will be able to meet all their financing requirement basis existing cash, plus the internal accruals that comes, and as well as some of this chunkier monetization that we do around the commercial real estate that is attached to all these airports individually. So now coming to in terms of the various growth. Yes, so as you know, the Delhi and Hyderabad has already started declaring dividend last year, while Delhi may take a pause for next 2-3 years considering the big expansion, but Hyderabad will continue to give dividend. So these dividend cash flows, depending upon the timing and the size of the new opportunities that comes to us, and obviously we all know that those opportunities are huge, and that's how our investors also are looking at this space and wanting to grow using GMR as a platform. So depending upon that, we continue to believe that we will have the significant cash flows out of these dividend cash flows, or the multiple levers of, let's say, in any of the airport we own anywhere from 60 to 100%. So we can even think of, depending upon if so required, some bit of minority divestment at any of the airport. So that enables us to ensure that we don't lose any of the opportunity that comes our door.
Are you guys, and either of you, can reply to this, are you guys in active conversations for those small, relatively minority divestments in any of the airports that you own a majority stake in already?
No, we are not.
We don't even need it as of now, and we don't even think that perhaps we would need. These are only enablers. I just gave you the preamble that these are the various opportunities.
Yeah, I was just wondering if you are in active conversations any which ways. A lot of times string of pearl strategies also works wonderfully. Just one small clarity. Sorry, Saurabh, you want to make a point?
No, go ahead.
Okay, just one small clarity that I needed. You've mentioned...
No, my point was that
Please carry on.
Sorry, go ahead. We just accosted. Okay, what I really wanted to highlight is, if you look at the quality of investors who have come at the platform level, there is no need for any capital raise at the subsidiary levels, at the operating level. And even if it is, like what Sushil highlighted, that as we grow, these opportunities will be evaluated along with our partners. And if they want to participate in something which is at the subsidiary level, they're most welcome to do that. But we don't have to go outside anywhere to seek capital. This is now a play where we will determine the merits of an investment and seek investments in that growth. So I think that's the limited point I wanted to highlight there.
Can I request you to elaborate a bit on that? And the reason I do that is because when I speak to a lot of investors who watch the growth of infra companies, some of the other, one of your peers as well, and all of them have to say that in the next 10 years, you will actually view GMR as an airport player. Yes, the other businesses are there and they may thrive and they may do well, but it'll largely be an airport operation dominated business which these companies could be known for. Would that be a game plan of sorts, even if it's in the initial stages?
Yes, that could be. We are searching for growth, and airports is at this stage offering that growth. So there is no reason why we will not be a large airport player, both domestically and internationally. Like Sushil pointed out, we are the 4th largest in the private space. So for us, we will go wherever the growth is.
No, you are absolutely right. Actually, if you see that we are in a space, airport infrastructure is a space which in itself is offering a humongous opportunity to grow, and that's where our expertise is, and that's where we have, if you may use, the least of the competition. So the entry barriers are very high because this is very sensitive space. To understand this business and operate into a sensitive space like airport infrastructure, it's not that easy. So we are into a space where we can capitalize onto our expertise and the learnings that we have acquired over last decade.
Okay. Last couple of questions, gentlemen. Just one clarity on these earnouts that you've mentioned, up to 4,400 odd crore rupees linked to achievement of certain agreed milestones. Would you be able to tell us about these, if it's possible, one? And two, some elaboration on the deal that came about 3 days back. Somehow it escaped the minds of the market, but it seemed to be an interesting one with Bharti.
So you perhaps opted for escaping it, but nonetheless, so coming to specific to the ratchet, because today is the day to talk about the equity investment, not the other stuff, which we can talk separately later. So in terms of this earnouts, it's basically, as we all know, that these are generally a bit standard in the transaction size of this nature. So these are linked to the certain performance metrics where there is a timing issue, that the expectation is there of achieving some of these metrics in a particular time frame, and our investors has appreciated and they recognize that this is going to be achieved, but what we have agreed is let that get achieved, and these earnouts belongs to us. So the example being duty-free business, the duty-free revenue ramp up, how fast do we achieve? So is the commercial real estate. How fast and what size do we achieve? And good to note here is what you just said, that some of you escaped it, but one of the significant element of this earnout, in a way, we have achieved pretty recently by doing the monetization what we did.
Okay, Jaman, I'm guessing that we've spoken at length about the growth business, growth in the airport vertical, so wouldn't want to dwell too much on it, except for congratulating you on this deal. Good one, and all the best with any other deals that you do or the expansion plans that you have for your airports business. Thanks so much for speaking to Bloomberg Quint today.